Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's Tuesday, July the 9th. Lovely to see you all, and just enjoyed a very pleasurable hour with a gold member. As a gold member, you can book in 1 hour Zoom or a video call a month, and we can have a private chat. I just did that with Team Fusion, and that was very interesting indeed, going through everything that he wants to talk about, and anyone who's a gold member can have the same service. It was a lot of fun. All right, good stuff. Now then, we've got just an hour to go for the closing bell. I am working on some videos, the Fed meeting, the Tesla question, secret to wealth, and news on the bell. That'll be out later. But right now, it's time for another stock review. So let's go straight into it. We're looking at DocuSign now. Let's have a look. DocuSign, D-O-C-U, DocuSign. Let's load it up there. And let's bring it up here as well. DocuSign, D-O-C-U. Okay. Alrighty. And we'll bring it up on here as well. D-O-C-U. This is for Polo. D-O-C-U. Good. And let's go over to does it have a dividend? Let's have a look. D-O-C-U. I don't think so. But you never know. No, it doesn't. So we don't need that bit of software. What about this here? We'll go VU. 100%. And then we'll do DOCU, DocuSign, 100%. Let's take that out of there, take that out of there. Okay. Let's load up the software. Right. Interesting. Straight away, I got a good idea what I want to say on this one. I can see patterns appearing already. DocuSign. Latest news. Let's open that up. June 24th. Okay. Right, we'll use that. And let's go then to DocuSign, D-O-C-U, software company. Sign online. I've used this. I use this app all the time. Right. Okay, we got that. I think we've got everything we need, haven't we? Okay, let's go to here. Okay, chart. Right, time for another new review. Let's read the comments. We've got Crag. Hello, Team Fusion. Great chat. Thanks, Martin. It was an absolute pleasure. If you're a gold member, you can book 1 hour Zoom call or an online call once a month to chat through stuff. And that's what Team Fusion did. It was a very enjoyable conversation. Thank you for being a gold member. And I'm glad it was of use. It was very enjoyable for me too. So thank you. Hey team, John Granfor. Hi John. Hi everyone. Hi Rob. Hey Team Fusion and Rob, I've been swing trading Tesla today with a tiny account. Went from 560 to 740 today, so I'm up $180. No, you're not. Because of course you've got to pay tax on that unless you did it in your IRA. If you did it in your IRA, then that is free money, and you're absolutely right, you've been able to benefit from that. But if you've done it in your main account, your brokerage account, then you won't be up that much. You'll be up more like 140, not 180, because you've got to pay 20% tax out of that. Somewhere in that region. Of course, doesn't work quite like that, but just worth noting. Hey, up banana heads. How are you, Vaz? Lovely to see you here. Right, let's go straight into our next review. Let's do it. Leah as well. She's lying on the sofa right now in the dark. Lying back, relaxing. She's doing well, taking time. Martin, it's time for the piano. Sebastian, yes, it's always time for the piano. Lovely to have you here. Yeah, we do a concert every Friday. Do you join us on Fridays for the concert? I can't remember. Anyway, let's get straight into our next. How's Leah? She's well, thank you. She's resting. She's taking like special medication for her eye, but she's doing well. It seems to have fixed the problem. She's now just got to go through the recovery stage, which she is doing. So we're all good. All right, let's make a start. This is for Polu. Let me take this out here. Cut. Take it to the top. Put it there. Right. Okay. Let's make a start. I live in the UK, Martin, so there's an annual exempt allowance for capital gains tax of 6,000 or so. Oh, wonderful. So you can trade on your main brokerage, make $6,000 and pay no tax on it. Well, that's very nice indeed. I like that. Congratulations to you. That does make a big difference. Yeah, absolutely right. So nice one. All right, let's get straight into it. Time for another stock review. We're looking at DocuSign. Can you make money on this? Does all the money add up? Let's do our figures and look at the numbers on the board. Weigh it all up. Scratch our chin. Yes, you've guessed it by now. Let's do all of that. Look over the numbers and make an informed decision whether we should buy, hold, or sell this stock. Is it one for you? What is DocuSign? Well, tap the like button. Consider subscribing, and I'm going to show you all the amazing things that you're going to get in this review. You're going to see the balance sheet, the profit, the loss, the intrinsic value. Going to use the most advanced algorithmic software, which you'll all be able to get access to. Look at the margins. Look at the basic numbers, the deep numbers, the insolvency score, who's buying on the inside, who's selling on the inside. Let's take a look at the website. Latest news, insiders buying and selling. What's going on? What about how it compares to the S&P 500? All of that coming up in this review, so you can make an informed decision whether this is right for you. Can you make money from this stock? Well, full disclosure, I only own the S&P. I'm 100% in the S&P. I don't own any individual stocks, just the S&P. That way you know my views are real, honest, genuine, unbiased. Not here to promote, sell anything. I'll never message you saying, hey, buy this, buy that. But of course, if you want to buy one of my mugs from the shop, be my guest. But I won't be messaging you to ask you to buy or sell or do anything. I'm just sharing with you my opinions, and that's all they are. But they are based on the truth, honesty, and no bias whatsoever. So if that all appeals to you, click the like button, click subscribe, ring the bell. This is being done for one of our members. If you are a member of our channel, we'll do a full review for you. Yep, you can do it for just $1. Absolutely. As a member, you can get a review like this, up to half an hour video, which will not only provide you information, it'll trend on YouTube, very often number 1 or 2. It also accompanies Meet the CEO series. I interview CEOs on my show. And we'll tell you how you can get the CEO. You can get the CEO of this company on the show in a few minutes. So without further ado, let's get straight into it and let's see if it picks it up. Just bear with me. We should be back again in a few moments' time. Yep, I think we're back. We had a break in signal there, but we should be back now. Let me make sure we are. Yes, I think we are. We're all good. Again in a few moments' time. Okay, I think we're all set once again. Right, so where was I? Everybody still with me? Okay, you check the main. Yeah, that worked, that picked it up. I was able to continue, but I did get a break in connection there for a moment. Let's carry on. So, let's take a look at, oh, where was I? I was over here, wasn't I? So let's take a more detailed look then at DocuSign and see exactly what it is. So here we go. Let's have a look at the main general. Oh, hang on. Look at this.
Charlotte May Weddings Limited has become a member.
We've got a new member, a new sponsor to the channel. A brand new member has just become a sponsor of our channel. I'll talk to you later on. That's wonderful. That happened during a live broadcast. We've just got a brand new sponsor of our show. How cool is that? I'll explain the benefits to our sponsor and all of you shortly. Let's go straight now into the position here. Let's look at the line chart, the general line chart. As you can see here, back from 2018, 18, it popped on COVID. Now, we're going to talk about this in a minute when we get to comparing to the S&P. Straight away, I don't like it. I've got high standards for what stocks I buy, and that is straight away out of the can, because what we had was a macro condition play there. What that means is COVID happened, and that changed the landscape. Everybody went online, a bit like Zoom. This stock popped, and then it collapsed afterwards. I don't like that. So straight away, this is a stock that is subject to macro conditions. I want a stock which grows to macro conditions, but continues to grow afterwards and not sell off. So straight away, I'm saying no buy from me, just like I wouldn't buy Zoom. All right, there are stocks that were affected by COVID that collapsed afterwards. They were trading plays, not interested in stocks like that. I buy stocks I can own for 20 years, not for 20 minutes. That doesn't interest me at all. So there we can see a very good example of a COVID play. Let's carry on now. DocuSign provides cloud-based electronic signature solutions. Its cloud-based electronic signature platform helps companies and individuals securely collect information, automate data workflows, and sign anything. Show more, absolutely. The firm automates manual paper-based processes, allowing users to manage all aspects of documented business transactions, including identity management, authentication, digital signature, forms, and data collection. Collaboration, workflow, automation, and storage. DocuSign was founded by Thomas H. Gonza and Court Lorenzini in 2003 and is headquartered in San Francisco, California. Listed name is DocuSign. Okay, we have Alan C. Tygeson. I hope I pronounced that correctly. Alan, I'd love to have you on the show. However, I don't go to anyone and sell my services, but what I do is I invite you to join us on a Meet the CEO series. I've interviewed many CEOs, and I've got many more planned in the future. To be on our show, it's simple as this. The investors, or yourself or your company, will get get to see this review because it will rank on YouTube. But normally what happens is investors email investor relations. They contact you at investor relations or directly or create a group around this stock, reach out to you, build a relationship, let you know that they are investors in your company and invite you to be part of my Meet the CEO series. And then you can communicate with them. And if you're interested, eventually they'll put you in contact with me. My email is martyn@martynlucas.com. And you can be on the show. We'd love to share your story with the world, and maybe you could put me right and tell me that it's more than a COVID play. But anyway, I'd love to have you on the show if you'd like to, and that's how it works. All right. Employees, 6,840, San Francisco, 2003. It's regarded as quite safe stock to own, this one. If you buy it with margin, it's 25%, which is the lowest. $10 billion market cap, quite a decent sized business. 52-week high, $64. 52-week low, $38. So quite a bit of volatility. 104.79, 105 is the price to earnings ratio. Very expensive. Trades on huge multiples. No dividend yield, just growth stock. 2 million is the average volume. 1.31 is the volume today. So don't expect any short squeezes. All right, let's scroll on down and let's look at the trading trends. What we've got here is the how it's trending on Robinhood. You can see it's being traded. It's a trading stock. It's exactly what I'd expect. It's a trading stock, not a long-term investment. Hedge funds, who's buying it? Well, a little bit. Let's scroll down here. A little bit of movement. I'm more interested, though, in those that hold the stock. We've just seen a sell here from Couture Management. I think that it is Couture Management. They've just dropped to 6.5% of their allocation, 4.5 million shares. What about Bridgewater Associates? They just bought 267,000 shares, which is $23 million worth of shares in Q1 of 24. So a bit of buying going on. What about insiders? Let's look for inside trading. Let's have a look at that. See what insiders are doing. This is very, very important. Inside positions. Well, back here we had October 23. We had a 43% buy and a 57% sell here. There we go. What about recently? Scaling down. It's a 50-50 one, this. It's not all buying or all selling. It's a bit of a 50-50. But who is buying? If you follow who these people are. Here we go. The president and CEO. Very important. He sold, but this is only a automatic sell transaction. We're going to come on to that news in a minute. This doesn't matter. 7,900 shares, no big deal. At 425,000, no big deal. That's just tax purposes. Look, automatic sell transaction. It's not the CEO going, I don't like the stock, I'm selling out. It's simply no more than just tax positions and reallocation. Nothing there to worry about. In fact, if you scroll down, insiders, automatic sell, accumulation of shares via a grant. So that's compensation. No one's really buying or really selling at the moment. So there's nothing really to shout about when it comes to inside trading going on at the moment. What about analysis here? This is Morningstar. I don't follow Morningstar. I have access to it because I'm a gold customer, but really I'm not bothered what they say. They're paid to say these things, so who knows what's right and what's wrong. The bulls say DocuSign's market consists of considerable more greenfield space than its typical within software. What about bears say, as the company moves upstream to increasingly larger clients, it is likely to face intensifying competition, particularly from Adobe. Absolutely. Adobe is the king in this space. Don't see DocuSign doing as well. Anyway, again, this was a COVID play for me. I'll come on to that, what I mean by that in a minute. Let's scroll down. Fair value is $65 according to Morningstar. I'll tell you in a minute what the fair value is, but they're saying 65, which means it's undervalued at 52. Okay, sounds great. Economic moat, none. In other words, their margins are slim. They can't really reduce prices and sell less to weather the storm. They've got no economic moat, not good. Uncertainty, high, not good. Standard stewardship, not great. Okay. What about earnings? Well, it looks like it's making some money, but is it growing? Well, not really. It's going sideways. Now, nothing wrong with that. If you own Coca-Cola or J&J and it does the same thing day in, day out, makes money day in, day out, not a problem. Is it growing anymore? I don't think a business, a stock like this can really grow. As it demonstrated, it was a macro play, and that was great. It exploded. It was a chance for it to be introduced to the world, then dumped afterwards. That just says no. If it carried on going, even if it had gone back but not as low as it was, at least it gained something. But to go back from where it was, that doesn't interest me at all. So it beats on earnings, which is good, but going sideways. And if we're not getting a dividend on the stock, what's the point of owning a stock that goes sideways? Not really much point, is there? Anyway, there we go. Let's scroll down and see what else we've got here. Who else are you buying the stock with? Like I said right at the beginning, Zoom, Shopify, look at this, all COVID stocks that popped. No surprise. People bought back in 2020, thought it would be a great idea, makes perfect sense, and really it's just gone back to where it was. No, waste of time. I wouldn't buy Zoom. Block, Upstart, I don't know about these last three. I've never reviewed them, so I can't comment. But I can see that it's in the Zoom camp, which makes sense of why it looks like that. So far, it's not a buy from me, okay? So no, tap the like button if you like this so far. Let's go and have a look now, and let's go and look a bit of the news around the stock, and also we'll look at the website as well. So let's go and look at that now. Here we go. So everything you need to agree. DocuSign. As it says, online you can sign. Adobe do this, not the only ones. Anyone can do it. Anyone can come up with a solution. Now, don't get me wrong. I'm not saying it's easy, but where there's a will, there's a way. They don't do anything proprietary and unique. Anyone could do it, right? Adobe do it. So would I invest in this so far? No. And not very innovative website. It's clean, but it's a bit basic, I think. It doesn't inspire me to jump in, but then it wouldn't do. The website really doesn't need you to do that. It's just telling you what the product is. And you want, you want something that can sign documents. This is an option for you. There are so many options available today. It's like Netflix. I wouldn't invest in Netflix. There are so many online streaming services. Which one do you choose? It makes you very vulnerable. The news, DocuSign CEO Alan C. Sells the shares. We just covered that in the trends, and it's not a big deal to me. It's not a concern. This is just normal tax positions. I'm not going to look at that and go, that's bad. Prefer to see him buying, of course, but you want to be buying yourself before insiders buy, not after, because by that point the stock has already popped potentially. There's a bit more on DocuSign. Now then, I want to share this with you. Before I go into the numbers, the balance sheet and all the rest of it, I want to share with you this here. This is what I'm talking about. If you put $10,000 back in 2019 in the S&P, you've doubled your money. You've got 23 grand now. You're very happy. If you put $10,000 in DocuSign, you've got 13 grand. You're still happy. You've made 3 grand in the last 5 years. Well, it's all right. You could have made more, but hey, you've made money, not to worry, whatever. And that is reapplying the dividends in the case of the S&P. But look what I mean here. You've got the S&P in 2020. It just had a little shock on the pool, little ripple on the pond, went down, as most businesses did, and then carried on rising. It wasn't really affected by it. There was a slight pullback, but we carried on growing our investments, our long-term investments didn't get shocked. They carried on growing. Well, DocuSign, everyone's online. We need this. Let's all buy it. Boom, up it goes. Everybody bought it, and then it came back, but it didn't it didn't then continue along the line of the S&P. It dipped below it, and it's continued dipping below, lower and lower. So it got all that, if you like, publicity of how wonderful it is. Everybody's using it. Everybody's buying it. However, maybe everybody bought the stock, but not everybody used the platform. Well, obviously, because if they all have loved it and they made loads of money, the stock would have remained up, or at least above the S&P, with all this free publicity, if you like. But in fact, it's below, and it's continued falling below. So again, another reason not to own it. Prefer to buy the S&P. There's no point to it, in my opinion. But now we'll look at the numbers. So let's go and look at the numbers now, and we'll see if now it actually makes sense. See if we can draw something from this. Okay, so let's go and look at the numbers, and we'll go onto the board here. We'll do our figures, and we'll see if we can scratch out a profit on this stock, shall we? All right, let's go and have a look. Tap the like button and consider subscribing to the channel, and there we go. Right, so let's have a look at the numbers. All right, okay. Let's see how it all stacks up. Let's start off with the intrinsic value. The intrinsic value is very, very important. And this one we can rely on. Here it says our valuation is $73. Now, you may remember a few moments ago when we looked at it, Morningstar gave a general fair value of, I think it was, wasn't it 65? Something like that. Yes, 65. They are saying is the valuation, 65. Okay, which is quite nice, right? Considering where it is today, it's valued, it's priced at 52. We're saying on a base case, it's worth 73. Best case 100. Worst case 59. So there you go. We're saying it's worth slightly more than Morningstar. And it's a reliable earnings. It's a reliable valuation. So you might go, well, why aren't we buying it then? Sounds great. Why don't you buy it? Let's look at the financials, shall we? Right, revenue. Revenue is up 2%. Now you can see it's growing, but not much. It's not really, it's not a Tesla. It's not an AI play. It's just a steady growth. And we're not going to buy this hoping we get another COVID situation, are we? So, it's growing. But again, it's growing less than the S&P. What's the point? Why risk it? Operating income up 43%. Operating income expecting a bit of an S-curve, at least for the next couple of years, and then slow down. So maybe buy it for a couple of years. Net income is up 45%. Financing cash flow down 16% at negative 1.1 billion. Investing cash flow, we've got no latest figures. Operating cash flow up at 2%. Okay. Balance sheet, 2.9 billion in assets, 1.8 billion in liabilities. So liabilities are a little bit close to the assets. I like to see a nice 80% difference between assets and liabilities. But what makes it worse is if it's long-term debt. Let's have a look. 2.98, of which 1 billion is cash. That's okay. Don't like too much cash sitting around though. Not when interest rates go down. You need to be able to spend the cash on building the business to make more money, not just sit around earning interest. When rates come down, then what are you going to do? Right. So let's have a look at the long-term or short-term debt. It doesn't appear to have any long-term or short-term debt. That's good. Just ongoing costs, ongoing running costs, no debts. That's good. So we've got a nice balance sheet here. The balance sheet isn't going to underperform and be scary, and we don't have any debt really. So we're well funded. Gross margin, 79%. Sounds great. However, you need to compare it to the competition. Adobe. We'll come on to how you can do that in a minute to determine if you're interested in this sector, which is the best buy. That sounds great. But operating margin is 3%. Net margin is 4%. Very, very different than the gross margin. That's what you end up with. FCF margin, 32%. What about ROCE, return on capital employed, 8%. Okay. All positive though. All moving nice in the right direction. Return on invested capital, 4%. That kind of makes sense. It's about the interest rate, isn't it? About 4%. So basically put the money in the bank, I can get 5%. So that's basically what that is. Return on invested capital. All right. Anyway, whatever. Return on assets, 4%. Return on equity, we've got 11%. Let's scroll down to our next thing. We've got our overall profitability score, 50. Pretty good, but we need to compare that to Adobe. I'm going to give you the link in a minute so you can do it for yourself. I'm not going to do it for you. What about solvency score? Like I said, they're not going bust. They don't have any short-term or long-term debt. Got a bit of cash, got a bit of money. It's great. It's not a big cash cow like Amazon or Apple, but it's making money. It's got some cash. It's not going anywhere, but it's probably going to go sideways. Now then, Wall Street. Wall Street say worst case scenario, 7% downside, 23% on the average upside, which is good. Beats the S&P by about 10%. And on the highest, 72%. What would be the catalyst to take it to the highest? I don't know. Now, here's the competition. Very, very important. I'm going to show you how you can go to that. So very, very quickly, let me click on Adobe just quickly, just to give you an idea how this works. There's Adobe for you. You can use this software. I'm going to give you a link to it in a minute. Look at their margins, gross margins, net margins, moats. Oh, there you go. You just buy Adobe. I mean, you buy the best, you buy Adobe. 74%, 74%. You can see the difference, right? The upside, 10%, not as much because it's already grown, but it's a much more solid company. I would be buying Adobe if I liked this space. However, let's come back to where we were, and you can decide. You can do more research into it, and there's other synopsis, other ones you can look at. Insiders have been selling, but we looked at it. It was mainly for for tax purposes. Nothing great. But remember, when we see selling getting a little smaller and smaller and smaller, that's quite good because you think then we're going to start getting buying. That's what happens. So you could be buying just before, the next round of inside buying. So that's quite good. Short interest, 4.77. No major short interest. I don't expect a short squeeze on this stock. News, sentiment. Let's have a little look. 1 month ago, nothing particular. Shall we hear a little bit of this? 1 month ago, DocuSign slips after earnings. We'll hear a little bit here, just for a few seconds.
Yeah, the quarter was, we'd call it certainly on the soft side. Their net new sales look like they took a leg down from both expectations and the minor recovery the company had seen over the last year. But this is a company that obviously was a huge pandemic winner, and the business is just trying to kind of right-size itself after a couple of years of massive growth.
I was kind of wondering yesterday when this number came out if the market would finally kind of get its head around its new standards for the stock, which is basically single-digit growth. I guess maybe the answer is no. Do you think it's just still like a brutal comparison? Folks looking back at when they were booming and saying, all right, I don't need to own this right now. I mean, valuation's gotten punished already, has it not?
The stock's obviously had a really tough 2 years for a variety of different reasons, whether it's just my general space has fallen out of favor, but then two, growth has decelerated meaningfully. But I think your average investor that's involved with it today is really trying to, grapple with two items. Is one, what is the right kind of durable revenue growth rate of this company? Over the last couple of quarters, the expectation was that this might be able to grow at 10% again sometime in the near term. But the last quarter, last night suggests that maybe, that mid single digit growth rate's the right one. So some expectation differences there. But then two, on profitability, for a slow growing stock in my space, the margin structure, while it's improved a lot the last 2 years, is still suboptimal, and the leverage that we're getting this year is maybe not as much as you would expect if the growth isn't there. So kind of at this interesting point, is the company going to be able to drive more growth, or is it going to be more profitability driven? And at least in the quarter, we're finding that we didn't get either side of that equation.
Yeah.
There you go. Just basically what I already said. If we go down to the sentiment, the last 90 days, 56% positive, not bad at all, right? Last 30 days, 57% positive last 7 days. Just one news item, all positive and nothing today. Okay, so there is my review on DocuSign. So let's have a look at it. Let's review the facts and decide whether it's worth buying or not. Please do tap the like button if you like this, and subscribe and ring the bell to this news. Now then, first of all, if you'd like to use the software that I use before I give you my final conclusion, it's provided by AlphaSpread, and I partner with them, and all my members can get access to this for free. Click above my head for martynlucas.com. You'll find all links. Scroll down and you'll find AlphaSpread, or look below in the description and you'll find it there. If you are a member of my channel, you can also have the premium service, which basically makes the discount that you get, makes my membership for free. I insist anyone I partner with gives me the best deal, and it is without doubt the best deal. No one has the deal like that. The software is groundbreaking, always gets better. I love it. I use it all the time, and I highly recommend it. I use it all the time to review all of my positions. So that's how you get hold of the software. Now then, as far as the stock's concerned, obviously I don't own this. I wouldn't own it because I only own the S&P, so I can be impartial on my channel. That's what my channel is all about at the end of the day. But if I was trading, would I buy this? No, I wouldn't buy this. It does have some cash. It does have a good balance sheet. It's not got any. It's not got any really meaningful debt, or short term or long term. That's good. But its competition is far ahead, and its only benefit was the COVID play, and that gave it an opportunity to grow, and then it just collapsed after that. So really, there's no reason for me to want to buy this. There's no positive to say why I should buy this stock. If you like this sector, you might want to go and check out Adobe as instead of. But really, the only reason why you'd be buying this is if you felt that there could be some online explosion because of some macro condition. Then you're just basically gambling on what, another COVID outbreak or something like that. I don't know. I don't see the point of owning it. I think there's better stocks to own. It is potentially now good value, but when people say it's good value now, that's because based upon what it did before. Well, what it did before happened because of COVID, not because it was great. Because of COVID, it did what it did before. So to say it's, I mean, if you hadn't had COVID and you'd just took that curve out, it would have been flatlining for the last 4 years. Well, then you definitely wouldn't be buying it, would you? There'd be no point. If it had a dividend attached to it, you might consider it because you'd be earning a passive income. But other than that, it's an interesting company. I'd be a customer, but I'm not an investor. I don't see it as the best use of my money, to be honest. I'm sure it's a great place to work, and people that work there get paid and they make money, and people that use the service like it. I think I've used it a few times myself, but I don't see any point in owning the business. Not for me at this point. Click above my head for all the links, martynlucas.com, AlphaSpread's up there and down below in the description. Also, I'll put all the links as well. If you go down in the description, you can open up the More button at the bottom, and it will open up all the links where I always talk about what's above my head. Go and check that out, and you can see there. Over here, I'll put the full AlphaSpread playlist. I've reviewed nearly 200 companies now. Go and check them all out. And down here, I will open a playlist for DocuSign. So if there's any news, any earnings, anyone wants me to cover the earnings, they'll all be down here in its very own playlist. Until next time, as always, take care of yourselves and each other. All right, there is another stock review. Let's read your comments. Polo, hey, I am. I salute everyone and thanks for the reviews. Polo, lovely to have you here. You're one of our members. There is your first review. You do have another one. If anybody wants a review, you become a member of the channel and I will provide a review for you just like that. And not only will you get all the information, but it will also promote the stock as it will rank on YouTube. All of my reviews do. All right, let's have a look. SPCE. Right. Yeah. Yeah. That might be one of the most unattractive stocks I've ever seen. Yes, exactly. Price to earnings ratio. Not very good, is it? Right. Okay. Let's have a look at this. SPCE. Time for a full analysis of SPCE. Let's use that. Okay. Let's customize the data. SPCE. You can do an updated review. All right. Okay. Right. 701. 701. Let's do another review on this now. 701. 701 divided by 20. Okay. Okay. Absolutely right. Buy and own this company, not try to trade it. Absolutely right. Okay. Virgin Galactic, full analysis. I haven't done a full analysis, deep dive on the stock for, I don't think, 6 months up to a year. It's now time once again. We're going to address COVID. We have to look at COVID now because how that affected the stock and where we are today. A lot of stocks are being reassessed now to the time since COVID because now things are going back to normal. Also, what Jerome Powell said today at his testimonial presentation. I've got a video coming out about that, where we know rates are going, how it compares to the rest of the market, what the effects were after the split, and where we go from here, and also a look at the financials. We've always said that we can get through to Delta with money, but now we've got some new figures to share with you, which might indicate that is no longer the case. So let's have a look. Who's buying? Who's selling? The money, the debt. Will we get to COVID? Will it go bankrupt? What should you do? Should you sell and take out what's left? Because anyone selling now, of course, is selling at all-time lows. Everyone is losing money who sells now. No one's selling today for a profit. That wouldn't be possible, right? Unless you're shorting the stock, of course, and betting on it going down. We'll also look at the short position. So in this review, we're also going to do a deep dive and look at the the comparison, and this is very important, the S&P, and see when it went up, when it went down, how it compares to a COVID play like DocuSign, which we've just recovered, and Zoom, and other things like that. We'll look at the latest news around the stock. Morgan Stanley are saying it's underweighted, how it's now featuring on Wall Street Bets, where that leaves the stock, and the numbers itself as we look into a deep dive at Virgin Galactic. We haven't done this for a while, but we are about to do it now. So buckle up for the latest full analysis on the stock. Remember, I don't own the stock at all. I often get asked about this. It's not on my portfolio at all. I only own the S&P. I interview CEOs. That's why I'm impartial. Everything I say is honest and real. My wife still does own some on her portfolio, but it's got nothing to do with me. And she's keeping it for the long term, whether it goes up, zero, down, bankrupt, whatever. It doesn't influence me. I don't care about it. It's not important. What's here, what I'm doing here is what it's all about. So without further ado, tap the like button and let's get straight into it. There's quite a bit to cover, so it'll take a while. So I hope you're comfortable. Got a cup of tea? Let's get straight into it. So Virgin Galactic, we've just had a recent, a couple of days ago, Virgin Galactic is maintained at underweight by Morgan Stanley just a couple of days ago. This report came out. Virgin Galactic price target raised to $35 a share from $175 by Morgan Stanley. However, it was on the back of some news. At the same time, Virgin Galactic surges 7.5%. Is this an indication of future gains? A few days ago, and why I'm mentioning that, because since we had that little pop, it collapsed. Well, that was more to do with the Fed and rates and other things. We got a little bounce there, but that's all gone again today. We are going to get rate cuts. Like I've said, for 18 months, the summer of 2024, we'll get rate cuts, and we will. I've stood by it the longest time. I'm not going to give up on it. Still believe we're going to get it, and it's the summer until the middle of September. So I've got a couple of months to go. Otherwise, I'll be wrong. Let's see. I'm not 100% certain of that, and that's why I'm all in with margin as well. I believe that, and we can all see how the markets have grown and how my portfolio has grown. But this was a few days ago on the basis of all of this, good news coming, and all the markets are surging. Everything's up, whereas Virgin Galactic simply popped and then gave up again. Anyway, let's go into it, and then I'll go into some really scary numbers for you. Virgin Galactic shares ended the last session up 7.5%, which is great at 952. The jump came in an impressive volume with higher than average number of shares changing hands in the session. This compares to stock's 51% loss over the past 4 weeks. Now, as I read this to you, I'm going to share with you there has been institutions, they were all buying, but they've dumped it since then. If we go down here, we can actually see, you can see there the selling going on and how things have been moving. We have seen some hedge funds recently buy in, but it's such small amounts. It hasn't really done a great deal. And if we look at insiders, a lot of people are going, this is great. Insiders are buying. There must be something going on. This is fantastic. However, when we look a little bit more into it, and it's important to do that, otherwise you miss the whole point. These are simply compensation shares, accumulation of shares via grants or awards. It's not insiders buying, loading the boat, thinking this is great. It's a way to manipulate the stock. They have been basically giving away the shares as payment rather than payment with cash, if you like, getting rewarded, compensated in shares. That is all that is. So it looks great, and we see this little surge, and everyone gets excited, going, great, it's all doing well. But in reality, all we've got is compensation anyway. Let's dig deeper and then look at the numbers. The latest uptick in the share price of Space can be attributed to the fact that the company recently won a contract from the International Institute, we know all about that, to fly 3 research astronauts. That was good news, but that wasn't why the stock popped. It wasn't enough. The contract wasn't enough. It wasn't worth enough for the stock to pop up. It was on the other news of the rates being cut and all the rest of it out of the FOMC report. Anyway, this marks the second research mission that IIAS has conducted with Virgin Galactic. The company is expected to post quarterly loss of $5.07 per share in its upcoming report, which of course we will cover live. We've never missed a flight. We've never missed an earnings, and of course we'll cover it live. The links are below and above my head. Don't miss that event. That could be the last earnings, as I'm going to come on to in a minute, which represents a year-over-year change of plus 44%. That's good, right? Revenues are expected to be $3.5 million, up 87% from the year ago quarter. While earnings and revenue growth expectations are important in evaluating the potential strength in a stock, empirical research shows a strong correlation between trends in earnings estimate revisions and near-term stock price movements. For Virgin Galactic, the consensus EPS estimate for the quarter has remained unchanged for the last 30 days. And the stock price usually doesn't keep moving higher in the absence of any trend in earnings estimate revisions. So make sure to keep an eye on Space going forward to see if the recent jump can turn into more strength down the road. Well, now we know it didn't. It collapsed after that. It was a little bit of buy the rumor, sell the news. People jumped in, got out. No one has any faith. No one's owning the stock. They're simply trading the stock. And now it's made itself onto Reddit because of FFIE and GameStop. It's now been dragged into the whole meme craze. And now the stock has got more damage, which is exactly what Eric Kearney wanted from his time working at GameStop. He'd often tell me YouTubers can influence stocks. I'm sure that's what he wanted me to do, but I decline. I'm not interested in playing silly buggers with stocks. I'm interested in owning businesses, building things, not messing around with silly buggers on YouTube dressed up like idiots. Anyway, Virgin Galactic belongs to the Zacks Aerospace defense industry. Another stock from the same industry, Redwire Corporation, closed the last session. I think we move on from there. That's not important. Okay, let's now go to the numbers. Now, if you like honesty, if you like a straightforward review of a stock, tap the like button. If you prefer something just made up that benefits me, I suggest you go and watch The Wolf of Dubai. He'll tell you can have a training program, give him $10,000 and make money. We provide free scalp trading by somebody who's learned how to do it professionally, paid to do it, and we provide it for free. So you can have our training for free with someone who's actually qualified to do it. We are a very different type of channel. Let's look down now at the numbers. So first of all, this is one thing that drags a lot of people in. They look at the intrinsic value. This is what fueled Fisker. You may remember Fisker popped crazily until it went bust. It shows a valuation of $583 a share. That's right. You heard me right. $583 intrinsic value. People will look at that and go, oh my God, this is the best stock in the world. I'm going to own it. I should buy it. Okay, based on the intrinsic value, yes, you should, because now it's $7. Fill your boots. However, when you read into it more closely, it doesn't use DCF valuation. Now, this is important because these metrics aren't provided. They're not available. The company isn't reporting certain things. We can't evaluate properly. It's losing money. It's not making any money. We can't evaluate it properly, but it can be evaluated without it, and it draws the attention to the stock and makes people think, this is great. I'm going to buy it. I can't lose. I'll keep buying it. That would be a mistake, in my opinion. Let's scroll down. Now, this is where it gets interesting. These figures have changed recently. March, 8.4 million. In revenue. Now, this is what you decide. This is when it comes down to it. Are you buying it hoping that you can trade it? Or are you buying a business that you can hold for 10 years because it's about to explode? Now, what we've got here, you don't see very often, is a projected huge S-curve, an NVIDIA moment, a Tesla moment, a Bitcoin moment. Are we going to get that for Virgin Galactic? Now, if we are, if you believe we are, flipping heck, you should be loading the boat at this point. However, 8.4 million in March. Estimate June 30th, we'll be getting the earnings soon, 7.3, a decline. And then a further decline, 24, further decline, spending money, burning through cash, no money coming in, hardly any coming in, 3.2 million, 2.2 million, going down and down. Now, if we can survive this and get to this, 26, 32 million, 64 million, 92 million, 122 million. Very, very nice. S-curve. Do you believe we are going to get to that? If you do, hold on to your seats, buy as much as you can, own the business, everything's great. However, I'm going to show you some numbers in a minute which might scare you. Operating income up 9%. Operating income is steadily rising, steadily, no S-curve there. Net income up 11%, expected to rise very quickly in 24. We have estimates, but it's flatlined going through 24, 25. What about financing cash flow? Down 5%. Not really a major deal there. Investing cash flow up 118%. Investing cash flow up 118%. We're spending money. That's a negative. Operating cash flow up 5%, no projections. All right, now then, this is where it gets a little bit of a gamble. It's all or nothing on this stock now. You're either going to be rich or bankrupt. And that sounds silly, but it doesn't really. There's no medium term for this. It's all or nothing. You buy the stock, it makes you rich. Simple as that. Or you buy the stock, you buy your ticket, you make your choice, you lose all your money. Now, what's the chances of making your money and what's the chances of you losing your money? Well, if we look at the assets, 1.1 billion in assets. 1.1 billion in assets. Now, that includes a rocket and all the rest of it. The bell has just gone. We're making this during a live show. Just wanted to ring the bell for you. We're making this during a live show. I've been asked to do a full analysis for Virgin Galactic, so I'm doing it now. 1.1 billion assets. 765 million is in cash. Because remember, rockets and stuff like that aren't really assets anymore if the business goes bust. Who wants a rocket that's out of date? Now, why do I say out of date? I'm doing extensive research at the moment for a private company that exists like Virgin Galactic with the wings, the whole thing, the feather wings, the whole thing that can do what Virgin Galactic does without a mothership. Virgin Galactic have lost the edge, the surprise of time. The competition is caught up. It's not public yet. It's not a big deal yet. No one's buying it. No one's talking about it, but it exists. And I'm doing a lot of research into it at the moment, hopefully to get some videos out soon. But there is competition now. As we always said, people aren't going to sit around and watch Virgin Galactic take all the money. At the end of the day, the romance of the company is gone. You know, the last few Virgin businesses died. No one's interested anymore. All kinds of issues. The romance, Richard Branson, the white of shine, the guy with the silver hair, riding in, saving the day. Those days are gone. Doesn't exist anymore, right? Different world. Competition's coming from everywhere. Rate cuts coming, interest rates coming out, lots of new businesses coming onto the horizon, great new opportunities. Virgin Galactic have lost that. It took too long, spending too much money on their private parties, messing and buggering around as they did, and all the rest of it. Anyway, 1.1 billion, 765 million in cash. Okay. Now, bearing in mind, this was a couple of months ago. There's going to be less now. Not earned any money since then. There'll be less. But that's what we have right now, okay? That's what the earnings reports are for. Look at the liabilities. They're increasing to 660. All right. Long-term debt. So we're not just running costs now. We're not just paying to do stuff. We're in debt. We've got debt of 418 million. It's nearly, I mean, if we look at it, 63% of their liabilities. So we're not just paying to run the show and, whatever. We've got long-term debt. Now, debt doesn't do anything. Debt just costs you money. It's not we're spending money building the rocket, which of course we're doing, or spending money on innovation and discovery and whatever. We've got debt. Debt is a noose around your neck. It costs you money. You've already spent the money. It's not doing anything for you other than costing you money. Now, we're going to get rate cuts in September, but only 0.25%. We might not get another rate cut the rest of the year. Rates are going to stay high for longer. They are going to come down, but a meaningful difference is maybe 2-3 years away. And that is what Virgin Galactic need now. So their debts aren't going to go away anytime soon. We have got 1 billion in assets. We've got 765 million in cash. Maybe got less than that. But we've got 418. Nearly all the cash is debt. Already spent, already gone. Looking at that, to me, any delay, any issue, any technical issue, any competition to rear its head and say, we can provide the same service for less, or whatever, anything that takes away the attention from Virgin Galactic, bearing in mind their marketing is awful, it's all over. If we look at the gross margins, well, obviously the company's been losing money. No one's in surprise of that. 767%. Operating margin, negative 5,710, has improved. Since they stopped flying, the right thing to do, because they want to get more efficient, they want Delta, and so on and so forth. Not spending as much money. Not running the business the same way. We're just doing things and we're just getting ready for Delta. We're not putting on flights all the time. Net margin. See, people said, why can't you carry on flying? That's the reason why. This is the reason why. We're spending less money now, right? Net margin, minus 5,301. FCF margin, that's negative 5,718. ROCE, return of capital employed, negative 55%, starting to trail down again, not go up. ROIC, up slightly, return of invested capital. So they're making money on the cash they've invested. Well, that's going to go down soon because rates are going to come down, so this is going to start falling again. What about return on assets? That is negative of 42%. It's going pretty flatline. Return on equity, negative 113% and falling, not even holding. Now then, this is where we've got to look at cash flow, burn rates, increasing. They're now spending, they've saved money on operating costs, but they're spending money on the development now of Delta. You can see the cash flow, how it's been impacted over time. Look at this. Profitability score, 24%. No problem with that because they're doing what they're doing, and they're not flying every day. They're not bringing in buckets of money. It makes sense. They're not profitable like that. That's fair enough. We can live with a low profit. That's okay. We can live with that. But now what worries me is we've got a solvency score of 40. It's getting lower. The solvency score and the chance of going bankrupt is increasing. If this falls to 30, 25, the writing's on the wall, and we're heading in that direction. However, some upside. This is the point. If you believe it can get through to Delta with no issues, not running out of money, even though it is, if you believe it can do that, well, it can more than double its money here, 115% worst case scenario. What about the average? 483%. Well, that would be very nice, wouldn't it? A 4x, 5x nearly. Or what about a 10x? $84. Now, you may remember I said the stock can go to $100. Now, I don't want to come off disingenuous and claim as a success when I haven't got it. I claim that old money. We're not at old money anymore. We're in fact at old money. We would be at, I've done the calculation, 35 cents. So I said 35 cents to 100, not where we are today. That's 20 times different. So I'm not trying to convince you and say, hey, I said it would go to 100. People will say, well, you said it would go to 100 when it was 20 times more than it is today. And that is correct. Or 20 times less than where it is today. That is correct. So, of course, that's not on the cards right now. Now, do I still believe it could have gone to 100? Should it be at 100? Absolutely. If they'd flown celebrities, if they've made it trendy and cool, if they'd stayed ahead of the game, if they'd crushed the competition, if they'd secured finance by getting the stock price up so they could dilute, make more money, all of those things, they would be at 100. There would be more money in it. People would have bought it and it would be great. Look how Nvidia gets the excitement. Look how Tesla gets the excitement. Look how Bitcoin has had the excitement money. Virgin Galactic never attracted any of it apart from the initial flights right at the beginning. Other than that, no one's been bothered, which is a great, great shame. So the point is, you've got two choices now. Using this factual information, you've got to decide, can Virgin Galactic get through to Delta without any more delays, without any issues, still having the customers, still no competition? Then great, we could have $100 stock. However, if you think, like I think, it's going to run out of money before it gets there, if it gets there, there's competition. If it gets there and the customers moves on to something else, any of those things happen, it's going bust. The short interest, no real significant transactions here to shout about. I showed you what you've been looking at, witnessing is simply tax transactions and stock options. However, on my software, which is done properly, we're not focused on that. Whereas online, they're trying to share the narrative that the stock's going up, people are buying. They're not. They're just getting free shares. What about short interest? Short interest is 27.66%. Anything above 20% is excessive with volume, can force a short squeeze. One, there's not enough volume. Two, where's the good news coming from? There won't be any good news for another year. There's nothing to talk about. The only positive catalyst that we have medium short term is going to come shortly. If I go back over to my app here, is the earnings expected July 30th. Of course, I'm going to cover it. Click above my head down below in the description. You'll find the link. We've been beating on earnings, and earnings has been moving up. If we get a positive earnings, that we are earning more money, they could be taking more deposits, which they're not taking, but maybe they'll surprise us. I don't know. The stock go up, they could dilute, make some money. Stock's going down. How can they do that? Where's the money coming from? If we get a beat, and we've been beating every time, and we've been beating since Q2, then the stock could continue, could suddenly get a bit of a bounce, potentially. However, if we get a significant miss, which is very likely, then the stock is going to go a lot lower. Remember that they reverse split the stock to protect the stock, get it back into SEC compliance above $1. They didn't expect the stock to continue dropping. I said it would. A reverse split is negative. It's weakness of management. They wasn't able to get it above $1. They reverted to a reverse split months before they had to do it. They went to a vote months before they had to do it. Rather than finding a way to promote the business, they decided, sod it, we'll just reverse split it. This hasn't helped. I said it wouldn't. It's not good for the stock, and it's continued to go down, and now we're at all-time lows all over again. And there's no indication that this isn't going to stop. Now, some of you will say, great, this is great. I can buy the stock for nothing. This is what you got to look at. This is what you got to look at. We covered this morning on the show. We were talking about Tesla, and people were saying Tesla's now got expensive when you could have bought it at 110, 112, 117, but you've waited until 250, and now you want to buy it. Why do you want to buy it? Because everyone else is buying it. Well, are you going to buy it when everybody else buys it when it goes down or when it goes up? What are you going to do? Make your own decision. Don't be a lemming. You now know from this review how much cash they have, how much debt they have, the potential of the business. Don't look at the stock price. Can you buy this company now for this valuation of the business? 144 million. Can you buy Virgin Galactic for $144 million and own it? Own it. Be an owner. I own the business, so what money it makes is mine. I own the business. Not the share price, the value of the business. The business today is valued at 144 million. You can buy all the outstanding shares today for 144 million. Less, a lot less, a fraction of the cash on the books. Now, if the cash was earning money and interest, it'd be a good investment, wouldn't it? If they wasn't spending any money whatsoever and all their money was just sat in the bank earning money, it wouldn't be a business, it would just be a bank. It'd be a good deal because you would own all of that money plus the interest it earns. I'll do it. I'd buy the whole thing myself. And I would. I could get together a few people and we could buy the whole business. I know enough people to buy that whole thing. Just buy the whole thing. 144 million, we'll buy the whole thing. Great deal. However, we're not buying a bank, we're buying a business that's spending the cash. The cash isn't going to be around much longer. Another year, that cash is going to be gone. So you're buying 144 million for what? The hope it does well. So now what are you buying? So just because the share price is low and the whole business is just 144 million, that doesn't mean to say you should buy it. Just because it sounds cheap doesn't mean it's worth anything. I would rather buy it for $50 knowing 100% it's going to $100. I can double my money. At this point, it's more likely to go bust than it is to be successful. There's my full analysis on Virgin Galactic. What do you think? Click above my head for all the links. Alpha Spread. Oh, hello. Hang on.
Stephen Lewandowski donated $9.99 through a super chat. Earnings July 23, 2024 MTDR please Martin.
Okay, as a member, you can book a earnings just like that and I'll cover it, make a video on it, promote it and cover the earnings. Thank you very much. I'll write that down in a second, Stephen. So you make the decision now whether it's viable for you. I think it's most likely to go bust. Is it worth risking it? That's your choice. Click above my head for all the links. Alpha Spread, martynlucas.com, the website. Go up there and you will find my link. Scroll down all links page and you'll find the link to Alpha Spread. My members get the plan for free, or my membership gives you a discount, which makes the membership for free. Click below in the description. You'll also find it down there. I'll also put down there and above my head the links for the earnings. For the earnings, we'll cover the earnings live. You don't want to miss that, of course. That is make or break for the stock. And over here, I shall put the playlist, and over here, I'll put the earnings ready to go. So you can come and join me. Leave a comment there already. Queue yourself up. Get yourself a front row ticket. Virgin Galactic, there's my latest full review. I'm not here selling training programs. I'm not here when the stock goes up. I'm here when it goes down. I'm here when it goes up. I'm live 12 hours a day. Everything I do is for free. I'm here to help people. I'm not sponsored by anyone. I'm not on the Motley Fool, which has all kind of backing and sponsorship. I'm here telling you the truth. Take it, leave it, subscribe, don't subscribe. Honestly, I don't care. I only want to do what's right for my viewers, the ones that do want to see what I have to say, those that want all the bullshit and the lies. Plenty of channels that will tell you whatever you want to hear because you'll subscribe to that. I don't care. I just want to tell the truth. Above my head, down here, over here, over here. Until next time, as always, take care of yourselves and each other. All right. Earnings, July 23rd. Matador. Let's have a look. SPCE. There's my portfolio. Another green day. Beating the market again today. Up again. Marvelous. MTDR. Available July the 23rd. After hours. MTDR. Stephen Lewandowski. July 23rd. Remember, we're going to earnings season now. First come, first serve. There's only, the opportunity to do so many reviews. We have the backup channel. Sensei will do one if we need to do a doubled up. But if you want an earnings, then it's first come, first serve. You've got to be a member. You've got to do a super chat of at least $5, and you can book earnings in, and I'll get up in the morning or late in the evening, and I'll do your earnings for you, and then make it in the video and put it out. $5 is the minimum, and if you do that, you will get your earnings. So that's now booked in. July 23rd. Stephen Lewandowski, earnings for MTDR. Thank you, Stephen, for your support, and that's booked in now. Right, I've got to get off. I've got videos to put out. I'm going to send everyone now to the extra channel. Thank you very much for being here. Let me redirect you to the extra channel. There you go. There. Let me give everybody the link. There you go. There's the extra channel. Everybody watching me on Rumble. Let's have a little look. Let me just get past all the ads. Oh, it's ended. Oh, we had a break in signal, didn't we? We had a break in signal. That makes sense. Go live. Yes, I remember now. So they're not there. Great show, Martin. Get well, Leah. Thank you, John Granfor. Not Grimshaw. Not Gronshaw. Granshaw. Any other version. It's John Granfor. No way $5 too cheap. Got at least that minimum wage, Martin. Jeez. got to at least make minimum wage, Martin. What are we talking about, Danny? I have no idea what you mean. Yeah, John's laughing. Right, okay, let's get out of here. I'll send everybody now to the extra channel. I'm out of here. I've got some videos to make, so I shall love you and leave you. See you on the extra channel. And I'll go and get changed into more relaxing clothes. And I'll be back very shortly making those videos. I'll see you back in the morning for the opening bell. Another great day today on the markets. As you can see, I'm up 0.14. And, I nearly forgot. Charlotte May weddings. You may see in the chat that we now have a brand new sponsor. This is what I'm going to do. So let me do this now. I nearly forgot. We've got a new sponsor to our channel. I'll be doing sponsorship. Here we go. So edit this section. And this is Charlotte May. Charlotte May weddings. There it is. And we move it to there. Publish. Okay. All right. So here we go. There's our first introduction. Then space and Charlotte May at end. At end. Okay, here we go. So let's scroll down. Let me bring back this up again. Okay. So here we go. I'm about to make you a video. Stand by. All right. Are you ready? Okay. We would like to welcome our latest, newest sponsor to our channel. As you know, I do have sponsorship on my channel, but it's not available to Tom, Dick and Harry. It's only available to our friends and our members. Because I'm not doing it to make vast amounts of money at all. I'm doing it to help our members. So if you are a corporate sponsor, and I've had them before, contact me, offer me all kinds of money. I decline it. It's not for me. I only help our members who watch the channel, watch the show live every day, help them build their businesses. And we're very excited today to welcome a brand new sponsor to our channel. We're talking about Charlotte May Weddings, and let me show you how it works. If you are a sponsor member, it's $99 whether you're a gazillionaire or you've got no money. It makes no difference whatsoever. You don't get preferential treatment. You are all the same. There it is on the home page of my channel. You will see my extra channel. You will see my music channel, and then you will see our sponsor, Charlotte May Weddings, right there. Okay, at 235 subscribers. They've just started a wedding business. In fact, they've been doing it for a while, but they're now going to promote their channel here. So I'd like everyone to subscribe to their channel. So what we're going to do right now is go over to their channel. This is Charlotte May. You get all of this for $99 a month. You can always unsubscribe at any point, and there will be mentions throughout the shows, throughout the week. There'll be all kinds of little things. This show is sponsored by such and such, all right? So I'm now going to invite everyone to this here. There is the channel. Please go and subscribe to it. And I'm very excited to be able to partner with Charlotte May Weddings, because you may or may not know, I'm the world piano man, and I've done some very, very special royal engagements. I've done weddings all over the world. I still do weddings today when I do virtual events, when people have me singing as they walk down the aisle in the church, on the beach. They put a screen up. Sometimes for the honeymoon, they want me to sing them Wonderful Tonight, especially for them. And I do an online show just for the happy couple. So I'm very excited to be involved in Charlotte May Weddings. So there you go. Go and check it out. And if everyone could subscribe to the channel, that would be wonderful. And there'll be more information. Now, I want to thank Charlotte May Weddings for sponsoring our channel today. It's very, very kind. The $99 goes and supports our channel. And I'll do everything I can to promote your business around the world. So once again, thank you for your support. If you will always see them here, as long as they're a sponsor to my channel, on the homepage here, right next to me. So they will grow as I grow, they will grow. Absolutely fan-flipping-tastic. So thank you very much, Charlotte Weddings. And look at that. In the blink of an eye, they've already grown. Look at that. In literally what? 30 seconds? Gone from 235 to 237. Absolutely wonderful. So there you go. If you are a member of our channel and you watch the show and you want to be part of it, you can upgrade your membership to $99 and become a sponsor of our channel, and we'll help you grow and do everything we can to make you grow online. Remember, Google owns YouTube. If you rank on YouTube, you own and rank on Google. Click above my head if you want to be a member. Click below in the description if you want to be a member. Over here and over here, I might even open up some playlists, especially for Charlotte May Weddings. In fact, I will. And this will be the first one. One of our sponsors can have their very own playlist. And as they have some news, information, I can record a video and drop it in there for them. How cool is that? Until next time, as always, take care of yourselves and each other. All right. Okay, I'll make an intro video at Charlotte plus intro. Have you ever wanted to grow online, specifically on Google and YouTube, in the most cost-effective way possible? Well, now you can. There's a slight catch, however. It's only for my members. But what the hell? What does it matter? If you become a member of my channel and choose the sponsorship option, which is $99, I will promote your business, put you on the homepage of my channel, get everyone to watch, subscribe, see what you do. I've had corporate businesses come to me and offer me 10, 50, 100 times the amount that I charge for this deal, but I turn it down. I do not want to be a channel that's sponsored, taking money from people to consistently run ads. No, but I do it for my members who watch the show. So if you watch the show and you're a member and you want to promote your business, you can do it month by month. You can upgrade, downgrade, cancel anytime you like. But I promise you, you will grow on YouTube, you'll grow on Google, and I'll be here to help you. If you want to find out more about it, watch our first video of our brand new sponsor who only joined today, and you can see exactly what I did for them and how they grew within 30 seconds on my channel. Click above my head, down below in the description, I shall put the video right here. I just made it a few moments ago of our brand new sponsor. They're going to go up here, and down here I'll put more information, perhaps how to become a member and all the rest of it. Until next time, as always, take care of yourselves and each other. All right. Love it. You just got another subscriber. 238. There you go. 3 subscribers in 3 minutes. 1 a minute. Brilliant. Okay. I'm going to get off and get on with some videos. What have we got here? Looking at some of these short videos. Santorini wedding. Love it. Okay. That's it, I think. I'll get off now. Taking care of that. Taking care of that. Okay. That's it. I'm done. I'll see you back tomorrow morning. Look out for the premieres. Until then, as always... Oops. Been a long day. Tired. That's it from me. Take care of yourselves and each other.
Please. I sent a link on Discord. I think it could be good for the channel. Thumbs up.
Hang on a minute. I was just about to end, but I did get something pop in then. What was that? Where's it gone? I don't see it. I just ended the show. I came back because there was something that oh, it's on the extra channel. On the extra channel. Aha. Hang on a minute. Right. It went on the extra channel. So let me just look here. This is what happened just a moment ago. Vaz. I understand you are busy, but would you have time to see the new show proposal I made for you over the weekend? Please. I sent a link on Discord. I think it could be good for the channel. I understand you are busy, but would you have time to see the new show proposal I made for you over the weekend? I meant to send it after the show end. No problem. I sent a link on Discord. I think it would be good for you. Right, let me just have a quick look into Discord then. Just bear with me. Vaz. Now, obviously, you won't want me to play it on here. But, okay, I'll have a look at that now. It's right there. I've got it open. So, yes, I will go and look at that now. I'll go and get changed, get relaxed, and I'll have a look. So, yes, I will have a look at that now. Okay? I know you're trying to get hold of me and do stuff. I apologize for not getting back as quickly as I'd like. It's increasingly more difficult. But anyway, I'll end this now. And I'll take a look at that right now. All right? Okay, let me end the show. Till next time, take care of yourselves and each other.